Yes. Okay. Let me record the session. Let me see if I can do this. Hello, Kola. Admits. Okay. We're gonna wait for a few people to join, but mainly we're gonna be focusing. Obviously, we're gonna take a look at what is happening this week in terms of the fundamentals, and then we obviously gonna look at the charts, because most importantly, as much as we can sort of review the news and economic events that are happening, we also have to look at the level what the market closed at on Friday. We're also going to be obviously checking out what's expected next week, all of those things. And also remember, it's also talking about scaling in. Scaling in is basically where we are checking how you can enter more position if you place in your trade. For example, hey Kola, how are you, man? Good. Can you see my screen and can you actually hear my voice from your side? Hola? Oh, very good. Did I mute? Yeah, you're not doing it. Okay, let me just tell the guys on WhatsApp they can join in. Yeah, okay. Sandy, join. Oh, perfectly. Okay, cool. Can you also like, if you, it's fine, you can also share with me if you've got maybe like a trade um that you want us to take a look at, so we can do that also. Because obviously at this time, you know,
Okay, no.
yes.
Continue then. Yeah, we can continue and then we'll see as the time goes on.
Oh, okay. It's okay, perfect, okay. I'm just gonna wait for a few guys for like a minute or two. Just give them time to join. But hey, yeah, just give them time to join. Let me just do this thing. That's fine. Do this. Yeah, we're just gonna wait for a few guys to join in. But how is it? How is it going on your side this week?
Yeah, we're trying. It's the marketing everyone.
Yeah.
Yeah. Otherwise, as long as
as long as what? Hello? Can't really hear you, man. But otherwise, let me just go through the session. Okay, waiting for more people to join, but I think right now we are good. I think right now we are good. I think right now we are good. With my network, what's going on? Okay. Oh yeah. Okay. Okay. All right. Let me just go through the session. Okay. The topic that I basically wanted to cover. Firstly, I must say this disclaimer because it's very important for me to say this disclaimer for all the people out there. I must say this disclaimer, very important. The risk in trading forex futures or commodity can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial. So trading forex is very risky. Okay, it is basically a lot of time I use this just to guide as a guide. You know, I've done this as a journal. For those that are brand new, obviously my name is President Warren Manda. And basically today we're just gonna be talking, mainly we're just gonna be talking about obviously next week. Let me just mute everyone so that we won't have a problem with the sound. I think I've just mute everyone. I'm now content to mute the sound. Say yes. I'm just gonna mute everyone so that we can have one sound. Okay. So the topic we're talking about obviously is scaling in. Scaling in, what it means by scaling in is, for example, let's just say, okay, firstly, and or scaling and high probability trade. Okay, scaling in as simple means, let's say you are trading. Let's say you're trading USD for this one is already here, right? You've done your analysis. Let's say your analysis is based on what? 4 hour, right? You've done this analysis. And let's do that. You're like, no, I've done analysis. I'm expecting, let's say US CAD is here at this level. So maybe you've taken this trade from here, from this level as a buy, okay? So you've got this buy position here. This is your buy position for USD CAD, okay? After it has done all of this, okay? After the market has done all of this, okay? The market dropped, came back almost to the same zone and drop again and gave us this kind, okay? Let me submit more people. Okay, remember if you've got any question that you want to ask, maybe any pair you want us to analyze, obviously always post on the chat box, okay? You can do that. We can always take a look at those. So after this was done, the market actually dropped and it gave us this candle, massive hour candle, drop, it's touched this level, this zone, and then the market moved up, okay? And then from there, what you want to do, let's say first you've got your first buy position here, okay? Your first buy position here, you buy, let's say at with the 0.010, let's say 0.010, okay? So you're buying here, this is your first position here, right? After this consolidation that the market has been doing here, the market actually broke out of the zone with this candle, this hammer candle, and then actually after that break, and you can see this is not a typical normal break, it's like touching this level of liquidity or this level, this zone here, which is basically I call it demand zone, some people call it order block, doesn't really matter. And I want to emphasize, okay, so now you've got your first buy position here, this is your first buy, right? So now the market has moved into this level, right? So at this level you can enter. Let's assume this movement from here to there, let's just calculate how many pips is that. It's about 80 pips, right? So at this level, you have, just make sure that, yeah, I'm showing the screen. Okay, perfect. Let's just make sure, let's just say at this level, after taking that buy position, the market is here at this level now, okay? When the market reaches this level, you can enter, let's call it buy number 2. So now you've got buy number 2, but remember, you've already made 80 pips from this. So now you've already have, let's say you've already got, let's say $80 from your trade, from your trade one. What do you do now when you at this level where you see that the structure is obviously the market is broken the level, for example, the market broke, it came back, it reached this level, broke above, come back and close above this zone. And you can see this market is gonna continue going up. So you enter another buy here. This is what I call scaling. But now this buy number 2, the second buy now, you've already made $8 here. So now at this point, what do you have? You have, so now you have $80. Let's see, 80 USD. So buy number 2, you must, so buy 2 is stop loss. Let the stop loss be about 40 USD. Okay. So your second entry here, when you enter here, your stop loss is gonna be about 40 USD. So that means obviously if you enter in the trade here, your stop loss will be from there to there. So if you take another buy here, the stop loss about 40 pips. If obviously you enter in at 0. If it's if your lot size you're using is 0.10, it's gonna be 40 pips. If your entry is 0.02, let me just write that down so that everyone can understand. For example, if your entry is 0.20, so what you're gonna have, 20 pips stop loss, right? Because this is equal to 40 USD, which is basically the profits you've already made from this trade. Okay, so now you're entering a buy number 2 here. And obviously, when you enter a buy here, you are expecting the market will break above this level. When I say this level, you are looking at these spikes where the market was touching some sort of liquidity here. When I say liquidity, I mean some buy stop pending orders or some stop losses that were here. Obviously, remember some people when they were selling here, let's say here, I mean, when the market was dropping, they had their stop losses around there. So hence you got this. And also when people expecting the market to break above this level, they probably had their stop loss above here. So when the market was touching, so these pins, when I say pins, I mean these pins here, you'll see these pins, this pin was touching buy stop losses, stop losses, some liquidity of people, and then the market dropped, came back, touched again, came back again. So after a while, a lot of people saw this 1, 2, 3, these level, they were like, nope. Now, obviously, the market saw that a lot of people have got their stop losses and all their liquidity around here, and then it dropped. So when you enter a buy here, obviously your targets need to be above this zone. Okay, so as you can see with this, so the market actually broke above and it went to that level over there. So obviously, when you talk about a second buy here, so now what do you have? You've got a buy at 0.10. Obviously, when the market reaches this level, obviously I always recommend you close partial profits. So if you've made from this level to, if you made over $90, always close 0.05 at this level, okay? Because you want to grow your account, okay? So if you're closing 0.05, you're gonna close $40. And obviously, if your target from this level to that level is over 200 pips, obviously you're gonna be making close to $100 with the first trade. And with 0.2, yeah, so others will sell. Yeah, true. All right. So, and then obviously others will sell in at this level. Okay. So, and then you got 0.2. Remember, I said you want to enter 0.2, 20 pips, or you enter 0.10 at 40 pips because you want to trade a stop loss of 40 USD. Okay. So with this buy, your target is that level, which is marked as using the this. So this is your entry. This is your first entry here. Okay. Obviously, some other people will have more orders. Like they will have 2 here, they'll have 2 here. And then with this get here, they close half of this lot size. So half of this is 0.05. So here you close 0.05. Okay, which is half of 0.10. So at this level, you close half of this position here. Obviously, you can have bigger lots, like one lot, 2 lot, 3 lots, doesn't really matter. Another way you can do this, obviously, is have 2 trades in the same level. One, it's your tip, you're gonna have TP1 here, and you can have TP2 here, right? So TP1, TP2, 2 different trades, or you can have 1 trade here, another trade here, and then you close half here, then you close one of them. Obviously, you can also target that area over there. It just depends, because why I say target that area is because now you've got this. So after closing at that level, so now you've got this, which is basically what just update more people. So now you've got this big M, this big M, just called big M, which is what double top. That's just update more people. So this, now you've got this big M here. So this big M now is what which is basically big M. So we got now this big M here. And obviously now you should close this, or you can close some portion, maybe 0. Another half of 0.05. And then, like I keep saying, you enter here because of that over there. Okay, let me just show you. And you gotta buy, you first buy here, you buy here, and then the market breaks above this level, come back, retrace. From here, you enter another buy, goes to another level that you can actually target, because you've now got this big M, like I keep saying, that you've got this big M. Now your next target could be that level over there. Okay, remember, whenever you see this drop that is happening here, there was a big sell. So after that huge selling, obviously the market needs to do what? After you are selling, as a market maker, what do you need to do? You need to take your profits. You cannot take your profits unless you've got retail traders that are doing what? That are doing opposite of what you want to do. What exactly you want to do? You want to sell your position to people that are buying. So what you will do, you show them signs of buying, then obviously, and then obviously the market, whenever there's a huge selling, more likely is going to come back. Let me just clear everything out now. It's like it's a mess. It's a mess. Okay. I hope everyone is clear about the whole thing about scaling in, how we do it. So basically, firstly, you enter your buy here, first buy, the first buy. So after the market broke, So if you take this as a low, when the market, this, let's take this, let's just call it for everyone's sake to understand. I think a lot of people understand if we call that, because the market was dropping and we broke above, we just call that support. Just call that support. Okay. This is gonna fit now, which is like this. This was previous support, the market broke, came back, and then obviously you say here you enter, buy one, right? And then this is, I'm talking about scaling in. For those that are new, I'm talking about scaling in into positions. Okay, scaling in. So your first buy is here, right? When the market breaks above and close above that level, you can enter by number 2. Okay, by 2. As we are doing the session, it's basically a teaching session, but also we're doing some analysis. Okay, so you enter by 2. Your targets, remember, when you enter buy number 2 here, remember the market has already made a move. So this is a move, right? Just move it there. The market has already made this move here. Okay. So after moving so much, going up, what the market will do, it will retrace by, let's say 50%. 50%, it means it's like pushing the price to the, okay, let me just gonna retrace by 50%. So from here, okay. So this pushing up, got here you're buying, and you've got the retracement by 50%, gonna use a Fibonacci. From there to there, it's about 50 is here. Let me just show you. Let me just remove this. And we just delete these lines. Okay, let me turn off people. Okay, and then you've got that. Okay, this movement is from there to there, right? So if you take a look at our 50 level in the Fibonacci, this is our 50 and 60 level. So the market is moved up, came back here. We enter buy number 2 here, right? 50 retracement. Remember, because we've been looking at this, we've been watching this thing, this build up, this is building up, this is like building up accumulation of people that, of orders, people that are selling, people that are buying. So obviously the market breaks above. So our target is at this level here. The reason is because we can see these levels here. When I say these levels, I mean this touching these pins. So these pins basically are people, a lot of people started selling. Some people obviously when they saw this in the other side. So this is accumulation, building up of orders. And you can see building up orders, and then the market break this side, come back here. And because of those pins, the market broke above that level. Okay, I hope this makes sense. Buying here, buy 1, buy 2, the target is here, right? And then obviously after this, what do you expect? Okay, we're gonna just clear everything up. We're gonna clear everything up again. Once again, okay? The market push from here to that level over there, right? We're gonna do like a top-down analysis. So this is 30 minutes, 1 hour. So remember that push from there to there, again, we can do another Fibonacci. So we're pulling it up from there, right? So as you can see, this is 50 and 60, okay? Another thing that I wanna like recommend to people, you can see now after this push, what I'm expecting the market obviously to come here. As you can see, even this level here as a key level, okay? 50, because from there to there, 50% is here, 60% is here. And then obviously expecting that to do that, F is gonna continue the drop. Okay. So those are some of them. And if you zoom in on that, you can see the double. Let's see, you can see that pattern over there. Okay, zoom out. Okay. Okay. Yeah, so you can see that the market obviously I'm expecting it to drop to the level of 50 because after this movement from here to there, the 50% Fibonacci and 60 level is here. So before doing a further drop, it must continue going up and come back here. So basically, if the price has been moving up to the upside, okay, and also even if this was dropping, always expect a retracement. Retracement is where the market goes back to the 15, which is basically it's like the price move 100% up. Before the price going further up, it must do a 50% retracement, just like the price was 100 rand. And now basically because when I attract more buyers, the price will be dropped to 50 rand. So more people can actually continue buying the whatever instrument you are selling. Okay. Also remember, you can drop on the chat box if you want us to take a look at any other pair. Okay. Firstly, before I analyze most of the things, what I do mostly is I always take a look at the USD index. Okay, I think I've done that a couple of times. And this is the USD index. Okay, I look at this before I do some analysis, before I do analysis on the pound, on the dollar, on the Nasdaq, and any other instrument out there. Always take a look at this, and you can see, I think we did share analysis of this, that expecting this to drop. As you can see, this structure, the market came back. And when you see a market doing this, so remember, a lot of people call things name based on your strategy. The best strategy you can have in trading is managing your risk, and that's basically it. The best strategy in trading is proper risk management. So you can draw a trend line, do all other things, but otherwise, what I want to emphasize is when I saw this pattern, I was like, okay, fine. What the dollar is going to do is not gonna necessarily gonna drop at this level. Yes, it made a drop here. Let me just show you what I mean. There was a drop here at this level, right? So there was this drop. Okay. There was this drop. Okay. So this drop came back to this level. I think we did share also this on the Telegram channel. So what happens here is simple, same thing over again. Okay, what the market will do. Okay, let me just move that so everyone can have a bit of understanding what we're talking about. What the market will do is number one, okay, this year, this is called consolidation, right? What is the purpose of consolidation? Is people call it accumulation of orders. Accumulation of orders, of buy orders, sell orders, right? And then there was this called a fake breakouts, right? After faking out here, obviously people started doing what? Started selling, right? Came back here and it closed above that level, okay? Whenever the market is on the consolidation, you must understand it's gonna break on the one side. So it broke this side, come back to this level again. So when it broke above, when it's closed above here, okay, you are like, okay, fine. What am I expecting to see now? The market broke above and closed here, right? On expectation. Remember, it's been what? There's been this consolidation of building up of orders. And you can see touch this level. So obviously, after a market is touch a level so many times, that level is weak. So if you want to enter a buy here, you want to enter a buy here, enter a buy after you've seen a big move on the opposite. For example, if you want to buy this thing, don't buy here unless obviously it's the first or the second time. What do I mean by that? I mean, Like for example here, this level, right? This level is safe. This is the first time it's touching this level, okay? And this year is a second time, okay? So the buying here is good because it's a second time circuit W, right? But now if you're gonna buy here after touching so many times, this level is weak. Do not buy here. They have a market, have a price action that is gonna make traders panic. When I say panic or cause chaos, or make them see a huge drop. So this here is where after market has done this, understand what it's going to do. It's going to go opposite because it's clearing out this liquidity or this money here. Because the people that are buying here, they've got their stop losses here, and some because their breakout trades like stop. After doing this, and then the market closed above this level, it went up. Okay. Remember, all of this money was collected after accumulation, after consolidation, accumulation, and then you see a movement in the market. So this here, like a nice bullish movement, right? Nice bullish movement. This bullish movement came afterwards, came after this huge drop. So while traders were thinking the dollar is now dropping, as they were selling, the bank traders or the market makers were entering their buy position. As you can see, all of this buy position here, from there to there. So after a huge buying position, what is going to happen now? What normally happen is this, obviously. This year, they're now taking profits. Where are they taking profits? If you look left, you can see there, right? They're taking profits at that level, just above there. So we started taking profits, started taking profits. So when they take profits, what happens is you see this kind of price action. When you start taking profits, you'll see this type of price action. Let's see. Let me just change this. No, I want to change this color of this piece. Just use blue. Okay. So this year it's basically bank take profits or market makers taking profits from their buy. So these buy orders are taking profits. From there, they are now taking profits here. And obviously, after such a push from this level, obviously, what we expect again, same thing over and over. Okay, they're gonna come back, retrace from there to there, retrace. And if you mark this properly, you'll see that this is a 50 and a 60 level of the Fibonacci. That is where again you enter your buy trade again. So obviously you enter another buy here and you can see it's within. All right. So another buy here because there was this bullish movement. Remember, if you are buying, if the market has been going up and obviously it's like buy momentum, it's gonna come back, retrace. Let me just delete. I'm not sure if everyone can see this what I'm talking about. Just delete this line and delete that. And delete that. And delete this. So this is 50 and 60. The price from that level drop. And now when the market is moving in this, I call this a compression, like a spring movement. This here obviously is building up liquidity because the market wants to drop from that level. Always, whenever you're looking at this 50 and 60, look left. Towards the left, you will see a building up. So now this where like some sort of, can call this resistance. Okay. Like I don't like, if you are trading, guys, always do not do this thing of say I'm a BTM trader, I'm a ICT trader, I'm a SND trader. What you are trading is price action, what the market is doing. You are simply reacting to the market. Okay. The best strategy in trading is risk management. Be able to manage your risk. I call this RR. Okay? For just, I think a lot of people in trading, they understand R meaning resistance. I call just call it resistance. don't want to call things name like your order block, whatever, supply demand, just call this level. So from here, expecting what? Obviously, when the market break above this level, we're like, okay, let me just call this support. Because I believe a lot of traders, they understand support and resistance. Just call this support. So this is like a flip zone, okay? So from there to that level, obviously you buy trade again or start here. Okay, you're obviously your take profits is there. What do you expect? You expect obviously the market to come back obviously to the 50 again and form some sort of pattern before dropping, because as you can see, this is a bigger this here. See the structure. Let me just tell you what I mean. There's a lot of people. See this structure here. Market move from here to there, right? It dropped, went up, right? After going up, it drop up until this level. From there, it went up again, and then from there, it just did some compression towards the structure, and then obviously what it's gonna do is gonna drop towards the 50 level, then go back, then drop again. Okay, what it's gonna do now is gonna form, see this bigger structure, it's gonna form a small structure this side. Okay, let's just, with this few minutes, let's just analyze few pairs. Okay, let's analyze gold. Let's just analyze gold. So gold, my expectation on gold was this. See, I thought gold was gonna be going see, yeah? So the reaction was there. Okay. So most of the time when I analyze, I always push the price, I always change from candles to line charts so I can mark previous highs. For example, here, this is a high, and this is low. Okay, so I can understand the level where the price reacted. Okay, change back to candlesticks. You can see now the price basically reacted at this level. What do you expect the price to do? Okay, let's go on a smaller time frame. So after breaking a level, drop, come back, retest, drop, reacting this level. What the price going to do, let's go smaller time frame. I'll definitely expect gold to go and react on that level over there, which if you go on a smaller time frame again, you'll see that the price more likely gonna break this level, because so many times it touches level. I'm expecting it obviously to react in that level, which is level above there. So there is an expectation on gold. Okay, so this is gold. Looking at this week, this is gold. Okay, gold. And then let's go over what else. Nasdaq. A lot of people are interested in Nasdaq. We did analyze Nasdaq the other day, and basically this analysis was on, I think, not using this so did analyze that we're expecting it to come back here, and let's zoom in, and obviously, okay, let me just do this. Okay, as you can see, obviously we marked this level, price reacted. Remember, when the price start doing this, it's simple taking profits off the sell. So this is a sell, big sell, drop, taking profits from the sell. What I'm expecting on this obviously is, again, it's the same thing. So the price can, from there, it can be the first one or it can be that before. So those are two critical level where I'm expecting some reaction from the of Nadaq.